What do you like about New Holdings, Moncler and Nintendo? That's from Stephen in London.
So Moncler is, we do cover the luxury brands, and so we don't just invest in technology names. And Moncler is one of the companies that we do like since we started the fund. And one thing that's happened in Q1 last year, as we talk about that, when we build financial model, we make forecasts over the next few years, and we dislike companies that are quite that are being impacted by macro uncertainties such as pandemic. So we actually sold out of Moncler in Q1 last year, and then we put the money into the likes of Microsoft, PayPal, Amazon, etc., with higher certainty in terms of what they can do during the pandemic. But then during the summer last year, that we revisited the valuation for Moncler, and then we initiated a position in Moncler. And since then, it has become a top 10 holding in December and January. And the valuation was very attractive at the time. And obviously, they have pricing power if you're worried about inflation, if you're expecting that the economy is going to open up, we're going to for our next ski trip or coming out, then yeah, the luxury brand would be a good place to be. Nintendo is an interesting one, is a recent top 10 holding, which we have written about. If you go onto our website, you will be able to see a short commentary on that. The reason we like about Nintendo, I think everyone is familiar with Switch, and you know all the characters like Mario and Zelda, etc. And one thing that we feel that we might have a differentiated angle on Nintendo is that the Switch could become like the equivalent of iPhone about maybe 5 to 10 years ago, that it could be the standard for Nintendo. So the problem for Nintendo, or let's say Apple in the past, is when you come up with a different products all the time, that is very difficult to build traction in that product. But if you started to have a product that would only improve on an iteration basis, which means that, let's say, iPhone model is the same kind of operating system, and then you will be able to build traction and be able to deliver high return on invested capital. At the same time, for Nintendo, that they are quite behind in terms of digital download, which would give them higher margin, and so and it's trending towards that way, and we like the fundamental side of that. So, and then if you marry the valuation of Nintendo where it's trading at now, we feel that it's quite attractive. So as we said earlier, that we would rather have bigger position in Nintendo today versus the likes of PayPal, which we still have in the fund.
Yeah, thank you. Do you expect that these strong performance from Microsoft and other tech stocks to come to an end? That's from Richard in Petersfield.
It depends. So I think if you ask the question whether Microsoft would be able to deliver the same level of outperformance in the last 3 years versus the next 3 years, then the answer is no. Because 3 years ago, the valuation for Microsoft would be significantly cheaper. That's when we first started the position. But then if you're asking whether Microsoft will continue to do better than the market over the next 3 years, I think from our perspective, we feel that the answer is yes, but it will be less in terms of magnitude. So the question that we are really asking running a high conviction portfolio is whether we can find something better. If we can, then maybe we would have either a smaller position in Microsoft, or maybe we could be selling out of Microsoft. But for the time being, we don't feel we are there yet, but we continue to revisit the portfolio at all times.
Thank you. May you explain your rationale for holding Amazon? That's from Michael in London again.
Yep, there are two parts to Amazon. I'm sure everyone is familiar with Amazon now. One is the retail business. The other part is the cloud AWS business. We don't really like the retail business, which is basically when we go onto onto Amazon.com to shop, and it's a highly competitive area. They have done quite well in terms of, I think, pioneering a lot of things that they have done. It's definitely much better than a lot of other competitors that the industry they are in. But it doesn't change the fact that it's still like a retail business, that every delivery they make to us, they make less money, right? Because there's a lot of shipping, refunding, etc. But then for the cloud business, which is a much higher margin business, they're the number one cloud provider in the world, leading the way versus Microsoft and Google, and that's not going to change. And they do, and it's very scalable in terms of how they operate. So within, I think, Amazon, that we like the company as a whole, but if we were to pick one of those two businesses, and maybe in time we get the opportunity to pick one, given that that could be some sort of like a, I don't know, like a breakup scenario, then we will pick the cloud business versus the retail business.
Thank you, Stephen. So we're at 1:40 now. We've got another question here. With all the negative press surrounding the stock, why do you hold Facebook? That's from Paul in Newbury.
There are two parts to Facebook as well. One is the Facebook page slash Instagram. The other part to the Facebook is WhatsApp. So I think if we are talking about regulation in general, it's good for the incumbent, such as Facebook. So it means that more regulation means less disruptors coming into the market to start a new social media platform. But then I think if we're referring to some sort of regulation or breakup for Facebook, it's very similar to Amazon. I think it's good for shareholders. I mean, WhatsApp, they're not making any money from WhatsApp, and you have over 2 billion users. I think everyone is a user of WhatsApp. And they have just made the announcement that they're going to make WhatsApp call available on desktop as well. So you can use WhatsApp to call your friends, just like you use Teams from Microsoft, etc. So I think we do like the business for Facebook. And I think if you look at the valuation of Facebook, there's a lot of those concerns has been discounted already by the market, so it's not like an unknown. And I think if you marry the valuation and the fundamentals, then we do like the investment thesis for Facebook.